How can a nation blessed with Africa's richest oil reserves, a veritable treasure trove beneath its soil, still face such deep and pervasive economic hardship, where families struggle to make ends meet and opportunities seem scarce? It's a question that echoes through the streets of its cities and the fields of its countryside. This is Angola's paradox in 2025, a stark contrast between potential and reality, a nation seemingly rich, yet grappling with poverty. For decades, the promise of oil wealth has fueled Angola's reconstruction efforts, rebuilding what was lost and striving for a brighter tomorrow, and transformed its skyline with modern structures reaching for the sky, symbols of ambition and progress. But this heavy dependence on this single, volatile commodity, a resource whose value fluctuates with global markets, has inadvertently left the broader economy underdeveloped, its infrastructure lacking, and its people vulnerable to the whims of the oil market. The nation's economic fate is inextricably tied to the price of a barrel. The relentless cycle of boom and bust, periods of rapid growth followed by sharp declines, has stunted long-term sustainable growth, creating instability and uncertainty. The dominance of oil has effectively crowded out other vital industries, stifling diversification and hindering the development of a more balanced economy. Key sectors like agriculture, the backbone of many African economies, and manufacturing, essential for creating jobs and adding value, have been neglected and underfunded. When oil prices inevitably fall, as they always do, the economic shock is felt everywhere, a ripple effect that touches every corner of society, impacting businesses, families, and individuals alike. The impact reverberates, from the bustling markets of Luanda, where vendors struggle to sell their goods, to the remote rural farms, where families depend on their crops for survival. Today, Angola faces the daunting challenges of stubborn inflation, eroding purchasing power and making life more difficult for ordinary citizens. The nation also grapples with mounting debt, a burden that weighs heavily on its future, and a stagnant job market, leaving many Angolans without opportunities for employment and advancement. The situation is further complicated as the brief and fleeting oil price recovery of 2024 fades into memory, leaving behind a sense of disappointment and renewed uncertainty. To truly understand the depths of this crisis, to unravel the complexities of Angola's economic predicament, we must look beyond the allure of oil and carefully examine the underlying structural weaknesses that are holding Angola back from realizing its full potential. In this in-depth analysis, we'll delve into the historical roots of Angola's economic stagnation, tracing the path that led to the current situation, and more importantly, we'll outline a series of practical and actionable reforms designed to pave the way for a more stable, diversified, and prosperous future for all Angolans. Angola's 2025 economy is battered by 5 interconnected challenges. First, overwhelming oil dependency. Over 90% of export revenue comes from crude, making the nation hostage to global prices. Second, soaring public debt, now over 90% of GDP, making repayments harder as the kwanza weakens. Third, persistent high inflation, at 25%, eroding purchasing power and pushing families into poverty. Fourth, high unemployment, officially 30%, with youth joblessness even higher. Fifth, stagnating living standards, real incomes are falling and essential services are underfunded. These factors feed into each other, creating a vicious cycle of austerity, uncertainty, and hardship. Breaking this cycle requires tackling all these issues together, not in isolation. In 2024, a brief oil price rebound sparked hope for Angola. GDP ticked up, the kwanza stabilized, and government revenues rose, but the benefits stayed in the oil sector. Most new revenue went to debt payments and imports, not domestic investment. Non-oil sectors like agriculture and manufacturing remained starved of capital, so job creation and incomes barely budged. The temporary oil windfall didn't address Angola's lack of diversification or its structural weaknesses. When oil prices dipped again, the fragile recovery vanished, exposing the same old vulnerabilities. The lesson: Angola can't rely on oil booms. Real reform is needed to build resilience and shared prosperity. Let's delve into the economic landscape of Angola in 2025. We'll examine the key economic indicators that paint a picture of the nation's financial health. These indicators provide crucial insights into the challenges and opportunities that Angola faces. These indicators, when analyzed collectively, reveal the depth of its crisis. The data exposes vulnerabilities and systemic issues that require immediate attention and strategic solutions. We need to understand the full scope of the economic difficulties to pave the way for recovery. Unemployment stands at a concerning 30%, a figure that highlights the struggles of a significant portion of the population to find work and secure their livelihoods. This high rate of joblessness has far-reaching social and economic consequences. The situation is particularly dire for young people, with youth joblessness nearing a staggering 50% in cities. This alarming statistic underscores the lack of opportunities for the younger generation in urban areas, potentially leading to social unrest and economic stagnation. This crisis is locking out a generation from stable work, preventing them from gaining valuable experience, building careers, and contributing to the nation's economy. The long-term effects of this exclusion could be devastating. Inflation hovers at a high 25%, eroding purchasing power and making it difficult for families to afford basic necessities. This persistent inflation creates economic instability and uncertainty. This inflation is largely driven by a weak kwanza, the national currency, and the high cost of imports, making goods and services more expensive for consumers and businesses alike. The exchange rate volatility adds further pressure. The rising prices are squeezing household budgets, forcing families to make difficult choices and cut back on essential spending. This puts a strain on their well-being and overall quality of life. In response, the central bank has implemented high interest rates to combat inflation, aiming to stabilize prices and control the money supply. However, these high interest rates make borrowing costly for businesses and individuals, discouraging investment and hindering economic activity. Access to affordable credit is essential for growth. The expensive borrowing environment is stifling business growth, making it difficult for companies to expand, create jobs, and contribute to the overall economy. Many businesses are struggling to survive. Adding to the economic woes, public debt has soared to a concerning 91% of GDP, placing a significant burden on the government's finances. This high level of debt limits the government's ability to invest in crucial areas. This high debt level is forcing the government to spend a larger portion of its budget on interest payments, diverting resources away from essential public services. Consequently, less funding is available for vital services such as healthcare, education, and infrastructure, impacting the well-being and development of the population. To manage the debt, the government is implementing austerity measures, which involve budget cuts and reduced public spending. These austerity measures, while necessary to control debt, can worsen unemployment and limit the government's ability to stimulate the economy during a downturn. These various economic pressures reinforce each other, creating a complex web of challenges that are difficult to untangle. This interconnectedness traps Angola in a cycle of low growth, high hardship, and limited opportunities for its citizens. Breaking free from this cycle demands comprehensive reform on all fronts, requiring bold policy changes and a commitment to sustainable and inclusive growth. In Cabinda, Angola's oil heartland, the slowdown is a grinding squeeze, not a sudden collapse. An international oil services company has slashed its workforce as investment dries up and contracts expire. Delayed payments and cash flow problems ripple through the local supply chain, hurting suppliers and small businesses. Laid-off workers struggle to find new jobs, and local shops see revenues plunge. The dream of oil-driven prosperity has soured. Cabinda's fortunes are tied too tightly to a single, shrinking industry. This case shows why Angola urgently needs economic diversification to protect communities from oil's volatility. In Huila's fertile highlands, a farmers' cooperative aimed to boost maize and potato production and cut food imports. But soaring input costs, a weak kwanza, and high inflation have made fertilizers and equipment unaffordable. Transport costs have risen, and access to credit has dried up as banks see agriculture as too risky. The cooperative's plans to expand and modernize are stalled, trapping farmers in low productivity. While oil revenues briefly rose, these farmers saw no benefit. Angola's non-oil sectors remain neglected. Until structural barriers are addressed, the country's vast agricultural potential will stay untapped. Angola's current economic situation serves as a stark warning. It highlights the inherent dangers associated with over-reliance on a single resource, particularly oil. The fluctuations in global oil prices can have devastating consequences for nations whose economies are heavily dependent on this commodity. This vulnerability underscores the urgent need for diversification and strategic economic planning. The temporary rebound in oil prices witnessed in 2024 offered a brief respite, but it was ultimately insufficient to address the underlying structural weaknesses within Angola's economy. These deep-seated issues require more than just short-term gains. They demand comprehensive and sustained reforms to ensure long-term stability and growth. The fleeting recovery masked the fundamental problems that continue to plague the nation's economic landscape. The impact of these structural flaws is evident across the board, with both the oil and non-oil sectors experiencing significant challenges. Businesses are struggling, investment is dwindling, and unemployment remains high. This widespread economic hardship underscores the urgent need for decisive action to revitalize the economy and create new opportunities for growth and development. The solution to Angola's economic woes does not lie in passively waiting for another unpredictable oil boom. Such an approach would only perpetuate the cycle of boom and bust, leaving the nation vulnerable to future price shocks. Instead, Angola must commit to implementing genuine and far-reaching reforms that address the root causes of its economic challenges. This requires a fundamental shift in mindset and a willingness to embrace new strategies for sustainable development. The first key step is to aggressively diversify the economy, moving away from its overwhelming dependence on oil. This involves fostering the growth of other sectors such as agriculture, manufacturing, tourism, and technology. To achieve this diversification, Angola must actively attract investment in sectors beyond oil. This requires creating a business-friendly environment that encourages both domestic and foreign investors to allocate capital to new and promising industries. This can be achieved by simplifying complex and often burdensome regulations, streamlining bureaucratic processes, and reducing the administrative hurdles that businesses face. Furthermore, it is essential to intensify the fight against corruption at all levels of government and society. Promoting transparency and accountability is crucial for building trust and attracting foreign investment. Providing support and resources to small businesses and local entrepreneurs is also vital. These enterprises are the backbone of any thriving economy, and their success is essential for creating jobs and driving innovation. The second pillar of reform is to impose strict fiscal discipline, ensuring responsible management of public finances. This includes actively working to restructure the nation's debt burden, making it more sustainable in the long term. It also requires broadening the tax base to generate more revenue from diverse sources, reducing reliance on oil revenues. Crucially, it means redirecting government spending away from debt service and towards critical investments in infrastructure, healthcare, and education. These are the foundations of a healthy and prosperous society. The third essential element is to invest in the Angolan people, empowering them with the skills and knowledge they need to succeed in the modern economy. This involves closing the skills gap through improved education and expanded vocational training programs, ensuring that Angolans have the qualifications required for the jobs of the future. By investing in their education and development, Angola can transform its youth population from a potential burden into a valuable economic asset, driving innovation and growth. These three pillars represent the cornerstones of a comprehensive reform strategy, namely diversification of the economy, responsible fiscal reform, and strategic investment in human capital. By embracing these reforms, Angola can break free from the constraints of its past and unlock its true economic potential, paving the way for a brighter future. With bold and decisive action, Angola has the opportunity to finally transform its abundant natural wealth into lasting prosperity and a higher quality of life for all its citizens. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.